Welcome, dear traders. You are watching a video review of the Asian session. To tame soaring inflation, major central banks are raising interest rates, and only China and Japan are going against the flow. They are reluctant to tighten monetary policy. Overall, central banks are now pursuing the same goal. They need to tighten monetary policy very carefully to steer the economy but avoid a recession. In today's video review, we will discuss how central banks are dealing with this task and how national currencies and investors react to their decisions. Let's start. Yesterday, the sentiment in the US stock market was rather mixed. However, later the shares of large-cap companies such as Amazon and Apple rose by 2% and 0.5% respectively. Surely it improved investor sentiment, yet traders remain cautious because of soaring inflation and the rate hikes. These fears significantly limit the upward potential of the equity market. Besides, hope of a possible pause in the Fed's tightening cycle waned following the release of the strong non-farm payrolls report. As the result, all three main stock indexes added moderate gains at Monday's close. Market uncertainty may last until the publication of inflation data on Friday. Analysts believe that the figure is highly likely to be high. Prices for commodities and electronic components are surging. For this reason, manufacturers will have to raise prices for consumers to avoid drops in revenue. It appears that inflation has not reached its peak yet. Investors again revising their portfolios in favor of safe haven assets. We are back to the same algorithm. The US dollar jumps amid decreased risk appetite, and the US dollar index has been trying to climb for the third day in a row. It means that Wall Street investors are very anxious now. Today, the US dollar index advanced to 102.65 against a basket of six main rivals. At the same time, analysts stress that its safe haven status has a downside. Long positions have been declining for almost months, indicating that traders are getting tired. Currently, there are no fundamental reasons to buy the US dollar, and this is why they are more inclined to open short positions on the greenback. Despite this gloomy forecast, the US dollar index showed its first weekly rise in 3 days in today's Asian session. It's still traded in the intraday upward range of 102.46 and 102.83. It's widely predicted the yen is depreciating against the US dollar. Japan is very dependent on energy imports. Commodities are becoming more expensive, which is bearish for the yen. So there are plenty of factors that prevent the yen from growing. US Treasury notes are also up amid inflation fears, and the yields of the Japanese and US government bonds vary significantly due to the widening rate gap between the two countries. The Bank of Japan's policy to keep 10-year government bond yields at around 0% is still firmly in place. It also expanded its stimulus programs for this purpose. The main priority is to support the economy, and Bank of Japan Governor Hirohiko Kuroda once again stated it in his speech. Meanwhile, the yield of 10-year government bonds exceeded 3% yesterday for the first time in the last 4 weeks. The US dollar kept growing versus the yen, reaching new two-decade highs. The dollar-yen pair is unlikely to repeat its March and April rally due to the Bank of Japan's ultra-soft monetary policy. On the contrary, analysts predict consolidation of the pair in the channel of 126 and 131. In the Asian session, the pair declined to a 20-year low, moving in the price corridor of 131 and 133. At the time of preparing material, it was at 132. The trajectory of the Aussie is mainly driven by external factors. However, today it drifted higher thanks to the Reserve Bank of Australia's key rate decision. At its meeting on June 7, the regulator unexpectedly hiked the interest rate more aggressively than the Fed. As seen in the table, the Reserve Bank of Australia raised the key rate by 50 basis points in June, and policymakers said that further steps are under consideration. The timing and the size of the next rate hike will depend on inflation. The regulator has pledged to take all necessary measures to push inflation back to the target level. And speculators very hardly surprised by an increase of the Aussie against the US dollar. Apart from that, the Aussie is gaining momentum amid positive news from China, and the country is getting back to normal after 2 months long lockdown. In the Asian session, it made an attempt to break through 0.7219. However, the Aussie fell and rolled back. Apparently, it may signal the exhaustion of upward momentum, and now traders are fleeing from risky assets. The risk of sentiment is likely to prevail this week. The Australian dollar may cement its bullish trend only by breaking through the resistance level of 0.7230. In the Asian session, this goal was unachievable. The AUD-USD pair was fluctuating in the range of 0.7160 and 0.7243. At the time of preparing material, it was moving in the bearish channel near the level of 0.7189. And that's all for now. Subscribe to our channel and keep close tabs on market developments. Feel free to leave your comments down below, and see you soon.